working backwards here from the weekend news. Exactly now, UK has a new prime minister. Rishi Sunak is set to become the UK's next prime minister. I, not jokingly, just retweeted that and said, let the pounding commence, which means it has already been in a protracted downtrend. I'm talking about the British pound dollar carry trade. It did an extreme expression here of oversold into a weekly fib, double fib level, and then bounced violently right back into resistance where it broke down, right? So above 1.14, you got a little bit of a move here that it could make to 1.17, maybe 1.1920 before it gets firmly rejected again. So either way, this is a short the rip. As you know, I've been very bearish on the euro dollar and the pound dollar. So this now will be tested because they have a new prime minister. Boris Johnson stepped out, and yeah, that's it. So no contest. So now we'll have to watch that very carefully. Same has to do, by the way, with the euro. This has done its little bounce back into the 10-week, but hasn't gotten back into 0.99, which is the monthly. You can see over here, just get this, we have quite a wedge going on. I know the biggest news is about China. I'm going to cover that, but because the prime minister just popped up as the winner, really no contest, I wanted to address the British pound. Okay, so the euro also related because they're in protracted downtrends together. This has an, kind of a funky little wedge here. It's popped up. Here's your 55, here's your 55, here's your 55, and it came back in. But use this as your guide. This is still in a protracted downtrend. I think this will absolutely move lower, but it's having its little, moment of intervention. Speaking of intervention, we're going to talk about Thursday to Friday. My warning, of course, brace for impact if bulls don't defend here. And then the very next morning, we had massive dollar swap with a Bank of Japan interventions. Remember, the US dollar has been doing a lot of swapping with central banks. Switzerland had not one, but two very large swaps last week and the prior week. And then Bank of Japan came in and did a massive yen intervention, which was 5 to 6 trillion yen. So they continue to try and defend their bonds. And I remind that they have to choose, right? We kind of know that it's either yen or bonds. They can't do both. They can't defend both, but both can fail. So right now I get the dollar, and I'm just using UUP because it's a very common, trading vehicle. It is in the same type of structure. This is very, very important in my humble opinion, as the euro, right? So you've got this, right, looking like it's going to roll over some more, and you've got the dollar looking like it's ready to pop up. Now, Friday, not so much. It had a massive, as you know, Bank of Japan yen intervention, but it's not working. And as I pointed out, they tried this before, and it popped right back up like a daisy and got above 145, the line in the sand, and then kept going. So this was Friday morning. We caught it live, which was very, very kind of wah, because it was right up to my price target from, from this April timeframe, right? Literally. So the big deal is getting back above this 151. I'm going to make this a big kind of line. So it's very, very, very obvious that it's a very important line. Oh, that's not really very. I don't want to make it black, but I kind of want to make it black. Yeah, why not? Let's do black. Let's be dramatic. Okay, the black line of death. How's that for real drama this morning? Happy Monday. All right. So anyway, it came back down. And then last night, the economy, the Minister of Economy, Japan resigned suddenly, right? So they're having all kinds of stress over there. But this is the big deal as it relates to the yen moving higher still. I still think it's going to move higher still. and the dollar higher still, and the euro and the pound lower still. But all eyes are on China. So I just wanted to review that stuff. Thank you very much, Michael, for doing kind of a compilation of that dollar yen call that I've been, very, very, very focused on. The other one is going to be the dollar yuan, and this is definitely setting free the bears right now. Remember, I have talked about this getting unpegged. I mean, this untethered, I think was the word I used, but unpegged is the same thing. We have to go through and look now at update all of that warning in regards to the China market, but we have a bloodletting in China plays. So the weekend started off with some major risk in the party congress over in China, the 30th. They hold it every 30 years, and President Xi escorted the ex-president, not he personally, but basically forced the ex-president out, who was sitting by his side. And very big sign of all reformists are gone and only loyalists remain. So it's, firmly under his control. So as a result, we had some yen devaluation, which is this dollar yuan. Yeah, I didn't mean yen devaluation. Sorry, yuan devaluation, which is this dollar carry trade, right? Higher since April, since literally Craig warned on the 19th, and then I confirmed on the 22nd. And these levels have been absolutely moving higher. And I think this can go to 8. This is just already past, everything of support, and it's going to start to get parabolic. That's exactly what happens when it moves above some key levels, right? I warned about the 3-month moving parabolic, and it has. Look at this puppy. So wow. All right. So this is the 3-month, warned on the 10-year. We're getting into that point where they're trying to bring it back down. This is really the danger point, right? Above point of parabolic move into 4.7. So I still have 4.7 on the bingo card from earlier this year. All right, so we've got higher yields. We've got, dollar right now with lots of swap trying to keep that down, but I don't think it's gonna last. And then we have China blowing up. By China blowing up, I mean China stocks fell to their lowest since 2018, as his leadership basically kind of spooked investors, and KWeb and BABA and FXI and the Hang Seng and the Shanghai and all of that is just basically tumbling, right? This is directly related to that kind of risk off sentiment by investors. But we already saw it. I already warned about it, right? This is something that's absolutely not new on my bingo card anyway. I'm extremely bearish this space. So hold on, let me just get to this. The result is that these levels that I keep giving in FXI, this happens to be on a quarterly, but to kind of show you, these are the levels I still see us tagging. I'm really a bear. All right, so FXY is the yen proxy, okay, for retail ETF, and it's been just absolutely busted, flat broke, busted. But I wanted to show you, this happens to be on a weekly, but these red lines are actually monthly, and this is a fib level from here. Let's just do here. Might be easier. I took this picture earlier. Okay, so just take a look for a minute. So since this FXY is on a monthly, and I talked about the intervention being potentially short-term good for a gold, yen, and bond, at least bonds would stop going down. The stay of execution would slow. Yen turned around really extremely strongly. Obviously, the intraday options literally spiked up 1900%. It was ridiculous. But big picture, it is still, here's my fib level, get 30, we hit. I really think 55 is coming into play. So I think the yen is not done going down. They're trying to devalue right into prosperity. That happens to be a monthly. And here's a 78.6. Fib retracement price target, baseline bet. I want to keep going. All right, so then kind of move it over to a weekly. You can see a little bit better, okay, that we would have to get above. If you are really bullish, you need this to get above 64. 64 is the 61.8 fib retracement on a monthly. I'm just showing you now on a weekly. And I still think 55 is in the cards. Okay. I think this is the danger. We have literally gapped down in this instrument so many times, it's ridiculous. We gapped down when we broke the 38.6 on a monthly. We gapped down here. We gapped down here. This is just riddled with a lot of pain and suffering. So I'm definitely just showing you or highlighting that we would have to get above 64 for me to be even a little bit interested. But that is a massive one-day intervention. We've had this before. It's been undone. Back to the yen. I did take a picture on the daily of this. I thought it was just so interesting. Oh, man, oh, man. Okay, see this trend line? May, June. This is FXY again. Yen, right? All the way down here. And then look what happened on Friday. So we could maybe get back up to that, 64, 65 area, but I'm still highly suspect. It's still in a protracted downtrend. Okay. Anyway, I just wanted to show you a different perspective on that. The dollar yuan is in, I don't know, unpegged, untethered territory. The yen is in intervention mode, but really at risk still of moving higher. And we have just nonstop drama in bond land. I don't know if you're just, I know you're tired of it, but I think these are going to go a lot lower. I think the risk is immense to try and position long in any of these Chinese ADR. All right, so remember that chart I showed you, right? This is broken. What was the next price target? 22. And after that, 1673. FXI too. I was all over this one, especially with FXI. That was extremely bearish. I also had this in anticipation that we would come up this monthly trend line, which I've been playing since literally January of 2020. This is just incredible. I was waiting for this anyway, and then we exploded higher, and then we gapped down on a weekly and a monthly. Beautiful continuation, beautiful continuation. Only reason we got supported here, honestly, was because it happened to be a yearly level, but I just don't see anything here of anything like to be saved, right? So this is massive breakdown. Not any, I don't know how to put this, but the value of the dollar as it relates to importing inflation, Japan right now just seems to be the best tell for me. And once this spikes, I think higher into that level I gave, oh, I got to move this down to see it, into 165, I think this will get rejected and come back down. When this comes back down, I think oil is going to take off like a rocket. They're not doing their clients any favors, I swear. Anyway, this is, you can see there's a little bit of monetization coming in. Okay, so that's it. It's the morning drama of what, 22% down for the Chinese market. I don't think it's done, but it's definitely starting to, the puts are starting to monetize. Oh, FXI, I posted this a month ago. I still have these levels. It breaks 28.61, hits 22, hits, let's call it 17. When, I don't know, but obviously it's picking up speed.